Good evening, everybody, and welcome to this meeting of the Audit and Risk Committee. This is a meeting of the Council held in public. It is not a public meeting. There are no fire drills planned, so if the fire alarm sounds, please leave by the exit nearest the large screen at the front of the room and proceed down the fire exit to the courtyard. Once it is safe to return, councillors will receive a text message. Officers will also be advised when it's safe to return to the meeting. We are recording this meeting this evening using our webcasting system. The webcast will be transmitted live and will also be available on the Council's website following the meeting. Any mobile devices should be switched off or set to silent so that the meeting is not interrupted by ringtones. Thank you. On to item 1, which is apologies for absence.
Thank you, Chair. An apology received from Councillor Brockman.
Thank you. Item number 2, any declarations of interest? Councillor Headley.
County Council.
Yeah, County Council, take that. Any others? No? Okay, thank you. Item number 3, the minutes. Have we all seen and agreed the minutes? Can I get a show of hands for those agree? Yeah. Sorry, Councillor Myers.
No, I know, but on the 15th I was on holiday, but I did send an apology into Suzanne governance, but it wasn't listed. So
okay, no problem. We'll get that added to the minutes. Any other comments? No. So those in agreement on the minutes with Councillor Myers' apologies included.
I'm sure that was it.
3. 3.
It was the 15th of October.
Yes. Yeah.
I'm not listed as being this.
You weren't.
You weren't there. Right, so 3 in favour. Any abstentions? Councillor Headley, are you abstaining or voting against?
I have no idea whether they're accurate or not.
So you're abstaining.
Okay, so we'll pop you down as abstain. Okay, thank you. Item number 4, the external audit reports for outstanding years 2020, 21, 21, 22 and 22, 23. We've got Steve from BDO here with us this evening to go through the reports, but first I'll pop over to Tony first just to give a quick overview.
Thank you, Chairman. This report deals with the results of the audit work and the finalisation of the accounts for the years 2021, 21-22 and 22-23. As you said, Steve Bladen from BDO is attending, and we'll go through the reports that are appended to the report in a few minutes. The report has 4 enclosures. Enclosures 1 to 3 are the audit result reports for each of the financial years. And enclosure 4 is a combined auditor's annual report that covers all 3 years in one report. So they're the appendices on the report itself. I just thought it'd be worth just setting out what the report's actually recommending at the beginning, so members can bear that in mind as we go through. So the first of those is to consider the matters within the audit report, which obviously Steve will go through in a sec. Item 2 deals with a specific control issue related to the financing of commercial assets that the Council purchased in 2020-21, which is included in the audit results report for 2021 and also in the annual auditor's report. I'm sure Steve will talk you through this from BDO's perspective, but the committee is asked to endorse the Council's opposing view on this matter. And I've set out the reasons for us taking that view in the body of the report, and those are on pages 4 and 5 of the supplementary agenda pack. And then recommendation 3 is just that the Chair is asked to sign a letter of representation for each of the years of the accounts that we're trying to finalise this evening, and that's a necessary step in doing the finalisation of the accounts. And there's a template for that on page 50 of the supplementary estimate in one of the BDO reports that members can have a look at. I didn't really want to add any more at this stage, Chair, so with your permission I'll hand over to Steve to talk through the audit reports.
Yeah, no problem. Thanks, Tony, and yeah, Steve, welcome to the committee. Thanks a lot for coming, and over to you.
Thank you, Chair, and good evening, members. So I'll take you through our reports, as Tony's already said, that relate to the years 2021 to 2022-23. So that's 3 years in total. So you'll see from your pack that there's one report for each year of our outstanding audits, and then a summary report that pulls the findings together from all 3 years. Before I go through each report, I think just as context, it's worth drawing attention to the local government backstop arrangements that were put in place last year. So those were put in place to enable local authorities and auditors to start to address the significant backlog that had arisen in terms of local authority audit opinions over a number of years. So there was a series of backstop dates that were put in place, and the first of those was in December 2024. And by that date, auditors were either required to have issued their audit opinion on a set of local authority financial statements, and if they weren't in a position where they'd completed their audit work, they were to issue a disclaimer of opinion. There were a small number of exceptions to that. So, for example, where an auditor was still considering a legal matter or an objection to the accounts. And for Basildon Borough Council, we were still considering a legal matter, and it's for that reason that we were not able to issue our opinions in December last year. So if I move on to those reports in detail, so the high-level message is that we will issue a disclaimer of opinion for all 3 of the years that we have open. But if I start to take you through 2021 first. So we did complete a significant amount of audit work on that set of accounts. However, what we've not been able to do is complete all of the work that we would need to do in order to issue an unmodified opinion. So specifically, that includes the post-balance sheet event work that auditors would typically do to assure themselves that there's nothing that has taken place between the date of those financial statements and the date on which they issue their opinion. So that's March 21, and it will be December 25. So we've set out in some detail the matters that arose during the course of that audit, and I'm happy to pick up any questions that members might have on that. But I did just want to draw attention to the legal matter that we considered. So during the 2021 financial year, the council acquired 2 commercial properties that were located outside of the council's geographical boundary. So those properties cost approximately £15 million, and there was one in Solihull and one in Northampton. So those acquisitions were funded predominantly through an increase in the council's borrowing requirement, and those transactions are reflected in the council's financial statements. Now, we do recognise that the council obtained its own legal view on whether it had the necessary powers to enter into those transactions and acquire those properties. However, our view, and again it's supported by our own legal advice, is that the council did not have the power to acquire those assets, and therefore it potentially acted unlawfully. So we've drawn out the reasons for that in some detail in our report. And essentially the reasons for that is that in our view the council does not have the power to borrow, to invest purely for income generation purposes. And when we looked at that transaction, we looked at 2 sides of it. So it's the borrowing and the acquisition of the asset. Now, as I've already said, we recognise the council has taken its own advice and that its advice differs from ours. But we will still reflect our view within our auditor's opinion. What we don't propose to do is take any further action in relation to this. So we recognise that the council is committed not to do any further transactions of this nature. And we also recognise that the Prudential Code is much tighter in not allowing councils to do that. And I think it's also worth saying that the council has subsequently disposed of the assets that were in Solihull, and so they're no longer in the council's ownership. If I perhaps just turn briefly then to our reports on 21, 22 and 22, 23. So for each of those 2 years, the position is that we did not undertake any substantive work on the council's financial statements. And again, therefore, our opinion will be a disclaimer of opinion. And that position is unchanged from what we've said to this committee on a number of occasions. For information, the reports that we have before you tonight, we have also undertaken our value for money work, which is separate to the work that we do on the council's financial statements. So what we're required to do there is consider the council's governance arrangements, its financial sustainability, and any other matters that come to our attention that would impact on that value for money conclusion. So for that 2021 year, what we will do is we will draw attention to a significant weakness in the council's arrangements, and again that links back to the council's consideration of the legal matters where we don't think that what the council did was sufficient. In terms of the two later years, so 21-22 and 22-23, we've not identified any matters that we wish to bring to your attention. Our value for money work is summarised in the auditor's annual report, so it's drawn, so all 3 years of that is drawn together in one report. And as I say, it also draws out the legal matter that I've referred to. There's probably not much else I would say, but obviously happy to pick up any questions members have.
Thank you very much. Who wants to kick us off with questions?
Well, only that we're going to get a disclaimed opinion.
You will, yes.
Yeah. And just for completeness, I think you said that the Solihull investment was sold.
It was sold, I can't remember which year it was sold.
Yeah,
It was sold in April this year.
yeah, without going through all the figures, do you know off the top of your head whether it was sold at a loss or did it wash its face? Because we would have been paying interest on the loan.
Again, I'll confirm it, but my understanding is it was sold at a profit. It was sold above the level that we paid for it, and it was a reasonable profit as well. Yeah, well,
Thank you. Councillor Myers?
Yeah, you said that you're not going to take any further instances of a legal matter. Is there any particular reason why that's the case?
So I guess there's a number of reasons. So we recognise that the council has a different legal view, and the only way that we could determine what the actual legal position is to take that through a court of law. Given the amounts are significant, but it would also cost a significant amount of money both to the council to test that in a court of law, and we don't believe that that's in the public interest to do so, particularly because the council has already committed not to do anything similar again, and recognising that a substantial part of those assets have already been sold. So we just draw out the matter in our auditor's annual report and don't propose to take any further action.
Councillor Headley?
So, through you, Chairman, are the external auditors able to confirm that there are no other borrowings that they've seen in the accounts which would be open to the same legal challenge?
So in addition to the borrowing that was undertaken in the 2021 financial year, there was borrowing undertaken in previous years to acquire similar assets. So there's assets that the council holds in Stevenage, for example, up in Richmond, but we did not specifically consider those because the audit of those particular years in which those assets were acquired is now closed. But my view would be that if we did look into those, we would reach the same conclusion on them. I think the other thing I would just perhaps draw attention to is, and we do reference it in our auditor's annual report, so the council has entered into some leasing arrangements where it's acquired assets on a lease basis, which it then leases on to a third party. So we did consider whether the council has the powers to do that as well, and there was no concerns that were identified from those. So those, again, those assets are fairly significant in value, so around 188 million when they were acquired.
Yeah, thank you. You want to come back, Councillor?
I don't know if this is the appropriate time to bring this up, but the sword of Damocles that's hanging over Essex councils at all levels, apart from parish and town, is local government reorganisation. My understanding is that it will be a requirement of all councils to have up-to-date valuations of all their assets, leases and the liabilities to assist the disaggregation of funds, leases and assets if and when new unitary councils are developed, or if that statutory instrument goes through Parliament. So if that is the case, would we as a council be required to have those assets independently valued?
Council, we get all of those assets independently valued annually anyway. We commission external valuations, so all of the valuations, the carrying values that are on our balance sheet at any time are no more than a year old. So yeah, we keep them up to date, and with the lease investments, we also recognise the full liability on the balance sheet associated with those as well. So we've got the borrowing on the balance sheet, we've got the liabilities for the leases on the balance sheet, and we've got up-to-date valuations for the assets on the balance sheet as well. So it's all there and transparent.
Thank you. Councillor Myers?
Thank you, Chair. Obviously, you said sort of in previous years as well, but the audits have been completed on those. Just out of interest, when were the rules changed in terms of when borrowing for commercial-only purposes to produce an income was changed? Because obviously you're now issuing you've had a legal dispute for the 2020-2021 accounts so far, but obviously going back, you're saying, but when was that particular ruling changed?
So there's always been a prudential code in place which governs the way that councils borrow, and the prudential code was changed. I can't remember the exact date, but it was applicable to accounts for the years 21-22. So the rule at that point, the rules were changed, and it became clearer that councils were not allowed to borrow to invest. I think in the years prior to that, the guidance was not particularly clear, and that's why we took legal advice on the interpretation of that to establish what we think the position is for our opinion. I don't know if.
Yeah, thank you. Tony, you want to?
Yeah, sorry, can I just come back on that point specifically? So the regulations that we relied on, which is the 2003 Act, has actually never changed. The Act is exactly the same today as it was back in 2018-19, and the law that was in place in 2021. The thing that changed initially was the rule about borrowing from the Public Works Loan Board, the PWLB, and that changed on the 20th of December 2020. And following that change, the councils didn't make any further purchases of commercial assets. That was their first indication that government were taking a stronger line, and that was where we drew a line in the sand and didn't do any purchases following that. The purchases that Steve's referring to in our 2021 accounts were made before that change, so that wouldn't have been applicable to those. So the regulations, the prudential code, the statutory guidance that was in place at that point was exactly the same as was in place in 18-19, and in fact it's still in place today. There's other mechanisms that government have used in terms of, as I say, changing the terms and conditions for PWLB borrowing, and also updating the guidance on minimum revenue provision, which again some councils were using to exploit the loans associated with some of those assets, so they weren't making a full minimum revenue provision. It's made it more difficult to make those sort of schemes viable. But in terms of the legal position, That hasn't changed in this entire time. It's exactly the same today as it was back then.
Yeah, thank you. My understanding from reading the report is that the changes, as they came in, I think 20th of November, and that these two assets were completed on the, I think it was the 6th and the 9th of November, so before the change in the guidelines. But I believe BDO also did our accounts for 2018-19 and 19-20, and that there were very similar sort of commercial assets purchased in both of those years that went through absolutely fine. So I'm a bit curious why that changed for this particular one when the two previous years everything was fine.
So the thing that, or the thing that changed, if you like, was that a couple of years ago there was an authority down in Surrey where the auditor where they did a similar thing where they borrowed to invest in commercial property. The auditor for that particular local authority sought legal advice, and that legal advice indicated that the council had acted unlawfully in much the same way that I've set out for Basildon. So once we saw that public interest report and the legal advice that was referred to in that public interest report, we decided we needed to take legal advice over what Basildon had done. And so that was the change, and that was why we sought that legal advice. So I accept that in previous years, those accounts were signed off with those transactions in, as they would have been for a number of councils, I'm sure, because Basildon aren't the only council that's done those sorts of investments. But having become aware of that matter, we didn't feel we could just not seek that legal advice, so that's what we did.
Yeah, thank you. And this other authority that you're speaking about in the report, into them, obviously the other elephant in the room from this report that I'm sure we'll all get onto is just how late it is. But I'm sure we'll get into more detail about that in a bit. But obviously this report was meant to be coming to this council in April 2022, I believe, for this year, and we're trying to get it in December 2025. I mean, was this report the sort of evidence that you're using from this report into the council in Surrey, was that from after May 2022, so after the time when we were meant to have seen this report, or before? Because obviously it strikes me that maybe we shouldn't be using evidence from after the time when it was meant to be in. It's you know, it looks quite convenient that that the evidence was if after we were meant to have seen the report, and 3 years later we've finally got it. So do you know when that report was published exactly?
I can't remember exactly when it was published. It was around that time, so around April 22. It was fairly certain it was in the first half of 2022. The fact that we hadn't at that point issued an audit opinion, we can't, you know, we have to, when we become aware of an issue, we have to follow it through to its conclusion, and that was why we took the steps that we did to seek our own legal advice. So I appreciate that that much of the audit work was complete at that time, but having become aware of that issue, we can't just ignore that. We have to follow it through to a conclusion.
Councillor Palmer? Oh, sorry, Councillor Palmer, do you want to pop your mic on?
You should hear me. I'm just a bit confused, because if the law changed on the 20th and these actions were carried out before, and previously they'd been signed off as okay, can you do that retrospectively? Can you make a judgment retrospectively to say that the law is now this, it was that, but we're going to penalise you at this point? I don't quite understand that.
I don't, as Tony said earlier, the law hasn't changed, so the relevant...
Sorry, the point we're talking about, when you picked it up on the 20th of November.
So the point, what has changed is kind of the interpretation of the law. So it's never been tested in a court of law, but a KC or QC, as the council got, will give you an opinion on the interpretation of that law. So as I've said already, the council had one interpretation of the Local Government Act 2003. Our interpretation is different. So I don't, as I say, I don't think the law has ever changed.
No,
It's just the interpretation of that relevant act of Parliament.
But that's still done retrospectively. Because if today I'm saying this is how things are going to be, can I go back several weeks and say, I'm going to judge what you did then on this interpretation now? That's what I'm confused about.
So yes, I think it. So for us, we have to look at what the council did. We have to look at the powers that it relied on to do that, and then we have to. In this particular instance, we engaged legal advice to understand whether the council had interpreted that Act of Parliament correctly. So yes, we can go back and look at.
But based on current situation rather than prior.
Yeah, sorry, I'm not understanding the difference between
So,
current and prior.
I commit a crime on the 10th of July, yeah? I
Yep.
commit a crime. But I do something, it's not a crime, but I've done this thing on the 10th of July. On the 20th of July, the law changes to say that is not acceptable. The interpretation of the law is this is now a criminal offence. Yeah? Does that can I then be prosecuted because I did it when it was lawful? So the decision was made by Basildon Council when it was having our information that we'd had from previous signed off audits that we were okay with it. Now we're saying it's not based on a new interpretation, but at that time when I did my crime, it wasn't a crime. If you see what I mean. Does that make it a bit less confusing or not really? Are you all completely baffled now? You get me, don't you? Thank you.
So as I say, the law has never changed. It's always been
Interpretation, I said,
yeah. It's
using
the
your language.
yeah. So it's the interpretation
Yeah.
of that Act of Parliament, and the point at which we received that legal advice was earlier this year. So we apply it at that point in time, and we do apply it to the 2021 financial statements, which is the year that we have open.
I'm still baffled, but thank you very much.
Councillor Murphy, do you want to comment?
If you let me in. Hello, Steve. If you don't mind me calling you Steve. Welcome to this party. Following on from that, is it correct saying you only looked at that situation because of the interpretation in Surrey? Had that interpretation not come out in Surrey, you would have allowed it to quite happily to go through and it would have been okay as the previous years. Basically, what I'm trying to say is you didn't initiate the interpretation until you heard of another case.
So we were aware that issue was ongoing within Surrey. I think once the auditor reported and issued their public interest report, then I think once that is out in the public domain, we have a responsibility to consider that for any audit that we've got ongoing. So in a sense, the answer to your question is yes. Once that information came into the public domain, we had to consider it and act and do what we thought was the right thing to do in terms of our audit, which is why we didn't rely on what was done in Surrey. We sought our own legal advice on that matter.
Yeah, I do understand that, but what I'm saying is, had that situation, not occurred, you would not have initiated seeking a legal opinion. Forget Surrey, it never happened. As it didn't happen in 19, 18, 19, 19, 20, you were quite happy to let it through or whatever auditors done it, and they didn't initiate a legal opinion because they found it totally agreeable.
I just think it's really difficult to answer that question. I mean, it wasn't me that issued the audit opinions on those earlier years. We were still undertaking our value for money work at the point that that issue became apparent in Surrey. I think it's also fair to say that we were looking at some fairly significant transactions, which were the lease transactions that took place. So I think it is possible we might have sought legal advice on the lease transactions, and at the same point considered it in terms of the freehold properties as well. It's just that once that information came into the public domain, we kind of had to follow it through. So it's difficult to answer that question precisely, I'm afraid.
So would it also now therefore be fair to say, because it isn't in the public interest to fight it out with millions of pounds in the courts, that really, perhaps your opinion, I'm not quite sure what the procedure would be, but your opinion would go to the government so that they could look at it and actually specifically say now what people can and can't do. I believe it has been tightened up, so maybe that's already been done, sort of, or because of, or is now complete, or is still being looked at. But is it a fair assumption that it would be ridiculous now to take it to court? It'd be far better for the government to say, okay, from this day, councils can do this, this and this, and they are not allowed to do that, that and that, rather than take it any further. Well, I'm presumably not going to take it any further, because it would be a battle for money with public. Now the thing's done, so, you know, would it be fair to say that that would be the best way forward in this situation, and now it's occurred that our end of it, just be, as you have done, just forgotten it, but noted it?
So I think, as we've already said, the prudential code has already changed, which makes it, which means that councils aren't allowed to do any more what was previously done, and that's one of the reasons why we're not taking it any further, because it couldn't happen again in the future. The council's already committed not to do it again anyway, and as I've already said, the assets that were acquired in Solihull have now been sold. So in our view, there's no public interest in taking it any further. So we'll just report the matter in our audit opinion, leave it there.
The last bit to this, when did you actually first look at this? This is after obviously the Surrey report or judgment came through. At what stage in the game was that? When did the Surrey, approximately, so the exact date, come through, and how did that affect our audit? I mean, were you hanging on for that bit and got on with the rest, or did that bit come in later and you were holding on to that bit, or were you just carrying forward and had to go back to reconsider?
So it's fair to say that the majority of our audit of the financial statements in particular had been completed by the time we got to the first half of 2022. But once we became aware of that information in Surrey, we felt we had to follow that through to its conclusion, which is at the point that we started to initiate seeking our own legal advice as well.
Can I ask you when that was? Because this committee, as far as we can remember, or I can remember, I've only been here 18 months. We heard about it the last committee, and maybe the one before that, but the ones before that we never heard. As far as I can remember and aware, we never heard anything about this legal problem. We were just waiting upon you to finish the audit.
So I can't off the top, I can come back to you with the exact dates, but we had previously reported to this committee that we were considering that particular matter, and we sought legal advice, and we got that legal advice in early in the summer of this year. So that was at the point that we were able to conclude on that.
So we're saying it was the report should have been done and finished before you actually got that information. In theory, it should have been well and truly finished. I mean, 2021 should have been finished by 22, not the summer of 24. So it should never really been a problem, other than the fact, as you say, retrospective, because something came up, you had to go back because you hadn't finished the report.
Yes, oh, okay.
Councillor Headley.
Yeah, thank you, Chairman. Through you, if I can ask for some more clarification. I personally think the Surrey example is just an example of the malaise that was going on across the country and councils using borrowing to invest. I think the catalyst for the changes was that the councils were borrowing off the PWIS at preferential rates, and probably the incentive to borrow to invest was probably because of the cap on council tax. So to secure enough funding to continue the council's work, I suspect councils across the country were getting advice on how to improve their cash flow in terms of you can't put the council tax up. And as all public bodies, we've only got taxpayers' money. But the opportunity was there to get preferential loans to invest. And I think some councils had spectacularly bad advice on investments, without mentioning any local councils. And I suspect that's why the rules were tightened up and people started to look at what councils were doing with money that they'd borrowed long term on preferential rates. And I think we haven't got to the end of this. I suspect that there is more to come out, because remember, external audits of all councils are running 2, 3 and 4 years behind. So I don't think it's being retrospective. I think it's just there are potential poor investments being made on borrowing. And until we get a grip of those investments and the liabilities that we've now incurred through that borrowing, it's going to be very difficult for any external auditor to sign off anything.
So I don't disagree with the point that's been made. Councils were able to borrow at preferential rates and use that money to invest in commercial assets, which generated a profit, which could then be used to fund or help support services. So I don't disagree with that. In terms of signing off on accounts, well, we will sign our opinion on the accounts. It's just that we will draw attention to that particular matter within our audit opinion. So in our audit opinion, we will set out that in our view, the council didn't have the legal powers to do that. I don't think there's anything else we can do at this stage other than just draw attention to that matter.
I can come back, Chairman. I completely agree with that. I think the auditors are doing exactly what they're required to do under the legislation, and I wouldn't expect them to do anything else. What I'm concerned about, for the public, you know, whatever council they pay their tax to, there potentially is a minefield of exposure and liabilities that we haven't got a grip of. You know, councils have issued 114 notices. Essentially, they've gone bankrupt, and largely that is either potentially poor mismanagement of the services or spectacularly poor investments. And I suspect that this council is no different in terms of those investments wouldn't have been made without external professional advice on asset acquisition and potential profits. I mean, no one's going to tell you to invest in something they know is going to make a loss. But with any investment, there's always the risk of a loss, as some councils have found out to their detriment. So I think the external auditor should be thanked for the work he's done, but they are required to point out discrepancies and or potential liabilities in the accounts, which is what they're doing.
Yes, I'm not in disagreement, but what we're saying is that the audit should have been completed and done 2 years before this came up. It came up in 24 and the audit for 2021 should be completed by 22. Now, in respect, it's created more work, cost more money, there's no conclusion because nobody's gone to court. The government have sensibly looked at the situation and tightened up. Anything that's happened in the past, what happens in other councils is generally of interest to us, but surely it's what happens in this council that is of interest to here and tonight. And that's what we should, in my opinion, be. What our concern is, or my concern, is, well, I have a few questions here that we go on to, and that will tell you what my concerns are. But I'm in total agreement. If there's a problem, they've had to go retrospective. But in reality, it seems to me that every other council in the country was doing it. We done it. The government didn't moan in 1819. They didn't moan in 1920. They didn't moan in 2021 when it was only 24 or whatever that they started that this problem became apparent by one auditor with one council, as far as I understand. There may have been a couple of other questions floating around, but
I don't think that's right. I think what has been cited is one case, but there's numerous cases out there that could have been cited.
So whose fault is that it hasn't been brought to everybody's attention earlier?
I'm sorry. According to my thing, I've got four mics on here. Can we? Whoever's not talking, can they turn the mics off? Thank you.
Sorry, but then whose fault's that? That is not our fault as a council. And the only question that can be asked is when the first one, and did the orders pick it up early enough? So maybe they're at fault, I don't know. But the one thing I do know is the audit should have been finished before this even came out about Surrey. It's as simple as that. There's no argument. This audit should have been finished in 2022, shouldn't it? So something that came out in 24 shouldn't have really bothered this audit. So the only reason we went back on it is because the audit was late.
I suppose that brings us on nicely to the question that I think we all want answering of why was this audit so late?
Oh,
Why? Well, yeah, but as we've said, this was due to come to this council in May 2022. 3.5 years later, we've got it. I mean, what's the reason for such a long delay?
So the reason is that, so while, as I said, the work on the financial statements was largely complete by the time that we got to 2022, there's two aspects to our financial reporting. So there's value for money considerations, which looks at things like governance, financial sustainability, compliance with laws and regulations. Once we got to 2022 and we believed there was potentially an issue, we had to see, we weren't just able to issue an audit opinion, we had to see that matter through to a conclusion, and it's that's taken the time to get to the position where we are now. So I don't dispute that the deadline for signing off audits on 2021 was, I'd have to check on the exact deadline, but I suspect it was before 2022. But the fact that we hadn't signed off, we still had the audit open. When something comes up, we have to see that through to a conclusion. We can't just draw a line under it and issue an audit opinion.
Okay, and you say that sort of the one issue was the thing that was delaying, but I mean, looking through the report, all of the risks that you've outlined, I think there are 8 of them for 2021, and almost all of them in the conclusions say the backstop date, which I think we said come in 2024. So 2 years after we were meant to receive the support, has created time constraints that have impeded us from completing all necessary procedures in response to the risks identified, and that line features in every single risk for 21, 22 and 22, 23 as well. So what's the, if the backstop, I think I've got this right, the backstop came in 2024, so if this thing was 95% complete in 2022, why is this line in pretty much every single part of the report?
So what the backstop date does is it effectively requires auditors, once they have completed their audit work, to issue their audit opinion. So as I said at the start, one of the reasons for not issuing our opinion in December 2024 was because we had a matter to do with laws and regulations that was open, so we had to conclude that before we can issue an opinion. Once we've done that, we have to move to issue our audit opinion as soon as possible. What we can't do, what we would need to do if we're going to issue an opinion that was unmodified on the financial statements, is complete a significant amount of post-balance sheet event work to make sure all assets and liabilities are correctly stated in those March 21 accounts, and the backstop date does not allow us the time to complete that work, so that's why the statement is in there.
Okay, thank you. Councillor Murphy, did you say you wanted to jump in on that one?
Sorry, a lot of it's been covered. What I don't understand. Okay, I'm a businessman. If I take on a contract, I do my absolute best. I don't think I've ever let anybody down very much yet to complete it. So I make sure I have the resources, I make sure I have the financial backup, etc., etc. Can you please explain to me in simple language? I'm a simple man, really. Why is it your company took on a contract which I presume you were experienced at doing, because audit is a specialised side offshoot to accountancy, so I presume you were experienced to do it, you knew what you were taking on. Why wasn't it completed in the time that it was allotted, or maybe slightly after, everything overrun slightly? Why is it 4 years late and still not complete?
So at the point that delays started to build up in public sector audit, and it's not just within BDO and it's not just within Basildon, at the point that the backstop arrangements came in, there was around 700 audit opinions across the country that were late. So that backlog built up for a number of reasons. So there was, first of all, there was the COVID pandemic where there was a different way of working, and that started to build some delays both in councils producing accounts, not necessarily Basildon, but across the sector, but also auditors being able to audit those accounts in a slightly different way, so doing it remotely rather than in person. So that's one factor. There was also, over time, there's also been a change in kind of the regulatory expectations on auditors. So the amount of work that an auditor would do in relation to the valuation of property, plant and equipment has changed over time. So the work that we do now is significantly more than we would have done several years ago. Similarly with pension fund liabilities. So there was an increase in the amount of work that auditors were doing driven by regulatory expectations. There were also, and we don't dispute this, there were shortages in the people available to do the work. So public sector audit is quite specialist. It's quite hard to attract the people to do that and retain them as well. So I don't dispute that there were shortages in the people available to do that work. So it's a range of factors that enabled a backlog to build up, which is why the backstop date was brought in, to kind of draw a line under that and enable local authorities and auditors to move forward.
I'll take a couple of points. Right, first of all, staff. Again, before taking on a contract, surely you should have had staff in place. And as for COVID, it seems to be used for everything today, and we all know it had an effect. But if you consider that accountancy and audit work is probably mainly 90% or 99% is office based, and people could work from home, and they couldn't go out, they couldn't go down the pub, they couldn't stay for an extra hour down the pub, they couldn't even go down the pub. So one would suspect that people could have been enticed to stay at their computer indoors a lot longer than they could be enticed to stay in the office. One would suspect a lot more work was done. I know I done a lot more. My paperwork was all up to date during COVID because I had all day to do it. So I don't get this thing where, as a company, you took on a contract and then suddenly didn't have enough staff. We're not allowed to give figures away here, but I've worked out the cost that your company's charging. I've divided what I think is a reasonable amount of money. It works out a 1 member of staff for a year. That's what it works out at, approximately. So if you had 1 member of staff that you were going to, or 4 members of staff, it should have been 3 months. So how has it dragged on so long? It's dragged on for 4 years. That is 1 member of staff over 4 or 5 years. You're looking at 1 member of staff doing perhaps 2 months' work on it a year. And I just don't understand how. I would like to hear the detailed reasons for that. Obviously we haven't got time, but as a businessman, I would find that appalling if my business ran like that.
I'm not sure there's much more I can add to the answer I already gave. So there were delays that the delays started during the COVID pandemic. So that was when they first appeared. As I say, there has been an increased expectation on the work that auditors will do on a set of local authority accounts, and so that has taken longer to do that work than it might have done 4 or 5 years ago. So that has again added to delays. So I'm not really sure that there's that much more I can add to what I've already said. And I accept that it has taken a long while to get to a position where we've had a view in terms of the legality of those transactions. So while that's been going on, there hasn't been detailed audit work going on, but it has taken a while to get to that position in terms of some clarity over the legal position.
Right, so again, as a businessman, when our new company takes over, which I call ZY, if they turn around to us and say it's going to cost this much extra to bring it up to date, do your firm feel responsible for covering those fees because of your inability to complete it on time?
So the fees that we will charge for the audit are what we feel is a reasonable fee for doing the work that we've had to do. Now, if for example, if regulatory expectations change and auditors are expected to do more work than was envisaged at the point that they entered into that contract, then we would expect to be reimbursed for that additional work. Now, the way that the fees work for a local authority is that there's a scale fee that is set by public sector audit appointments. If we want to charge more than that scale fee, we have to make a case for those additional fees, and that will go to public sector audit appointments for consideration. So I don't know if that's the question you were asking, but that's the way that the fee regime works in local government.
Yes, I have looked into the way it works, and we've been briefed on it. But you've got to look at it from when I say my point of view, my constituents' point of view. If I ask the builder to build a house, when that house is completed, we pay him. If we ask him to put a porch on it or a sunroom on it, he comes along and he says, oh, that's an extra 3,000 for the porch and an extra 8,000 for the sunroom. We say, fine, carry on. And when it's completed, we pay them. There may be agreement to part pay. And in building, there is normally foundations, first floor, second floor, roof. Now, we ask you to do a job. I understand if you're doing anything extra, you are entitled to charge extra. But as a businessman, you haven't completed the job. It's as simple as that. We've asked you to give us the audited report, 3 years, and you come back and say, well, we've looked at it, we've done a bit of work, and basically you can't trust any of it because it's a disclaimed opinion. So you haven't done the job that you're asked to do. And I understand that 1 year is sort of very nearly there and the other 2 are hardly there. Is that a fair comment? Perhaps you could enlighten me. So in 4 years, you've been, or 3 years, 4 years, you've been given 3, 4 jobs to do, 3 years to do, isn't it? 3 years. And you've done 1 year and you haven't completed that. And yet my constituents and us as a council are expected to pay you. And I've got to explain to my constituents, one who's a builder and can't go to work one day because it's raining and he doesn't get paid, that we're paying somebody who hasn't completed their job. Can you tell me what I'm supposed to say to him?
Well, the work that we have done and the audit that we have done is in line with the backstop arrangements that were brought in by law. So we have complied with the requirements that were placed on us by those arrangements. So I appreciate that we've not been able to give a clean, unmodified audit opinion, but the opinion that we will give is in line with the statute that is in place at this point in time. So I would argue we have done what we were required to do. I appreciate it's not an unmodified opinion, and I appreciate it's a disclaimed opinion, but nevertheless we have done what statute requires us to do, or we will do what statute requires us to do.
But that has only been brought in over a period of time. You were initially employed to give the unqualified opinion in 18 months after being given the figures or whatever the period of time was, and you have totally failed to do that job. Is that correct?
Well, we haven't, as I've already said, we haven't been able to complete our audit of 21, 22, 22, 23, and so we will have to give an unmodified opinion. There's no dispute around that, but that is in line with the backstop arrangements as they currently are.
Councillor Headley.
I don't know if this is going to be helpful, but again, for clarity and for Councillor Murphy's benefit, the procurement process for external auditors is not between the council and the auditor. We don't get to choose our external auditor. So the fact is that the fees and charges are on a scale. There is no dispute. We have to pay them, and BDO will complete their contract. Our new external auditors will pick up from the end of that contract, and they will undertake the audits. I think that for for this council, the imperative is to get everything signed off, even with disclaimed opinions, and to actually have a clean audit before LGR takes place, because that's going to be a complete nightmare if councils have outstanding audits and there's no clarity around the financial positions of the councils that will be amalgamated into unitaries if and when LGR takes place. So I think it's an interesting debate, but we look forward to paying BDO's fees, whatever they are, because there is no way of challenging them. They are what they are. So I think the encouraging thing is that none of the auditors that I know have actually, I think I don't want to put words in your mouth, but you've been content with the financial papers that the officers have put in front of you, and all you can do is audit the accuracy of those financial papers. As far as I'm concerned, the officers are doing a good job in the management of the council's finances. Yes, there will be questions over whether borrowing and investments have been prudent, and you can take a view on that, because there is potentially long-term liability and long-term debt. And I think that the other point I would make is that when LGR takes place, Basildon's assets and liabilities will be transferred to the new unitary. That new unitary could sell all of Basildon's assets to pay off someone else's debts. So welcome to the brave new world.
Thank you, Councillor Headley. I mean, coming back to the fee discussion that we're having, on page 37 of the 2021 report, which is page 45 of the supplementary agenda for those following on the agenda, additional audit fee of £83,000, which brings the total cost for 2021 to 189,000, which is, you know, more than twice as much as the previous year, and many times more than the 2 years after that. I mean, what was that £83,000 spent on? Can you give us some idea of what we're paying for with that?
So the audit work that we did in relation to those financial statements, so there was work around valuations that we undertook that wasn't included within the scale fee. So we already referred to the freehold assets that the council acquired in that year, but it also acquired some leasehold assets, which we did audit work on in relation to those. There's also the additional work that we've done in relation to the legal matter that we've spoken about and the legal advice that we took. So it's those factors that are driving that additional fee. There's one other point I would highlight, is that when the scale fee was set, the number of subsidiaries that the council had was, and the size of those subsidiaries was considerably smaller than it was in the 2021 year. So we did additional work around that as well. Now, I do appreciate that, as we've already said, that audit has not been concluded and that we will issue a disclaimer of audit opinion. But the work that we did undertake was undertaken in good faith, and so we would look to be reimbursed for that. As we've already said, there is an approval process to go through in terms of those additional fees. So before we can, so the process is that we have to report them to the audit committee, which we've done this evening. We also have to seek agreement from the Director of Finance, and if we can't do that, well then we make a submission to PSAA and they will determine them. But I'm sure that the PSAA will speak to the Director of Finance as well in making their determination. And I think it's also worth just saying that in terms of the later years, the fee that we have proposed is much lower than the scale fee as well. Now, that you would expect that, given that we're only issuing a disclaimer of opinion, and the work that we've done is significantly less than we would do to issue a full audit opinion. But it's worth making that point that they are lower than the scale fee. And just in terms of that overall fee, I think you said it was 189,000. That also includes work on grant claims that we have undertaken and certified as well. So.
Okay, thanks. So just to confirm, of that 83,000 additional fee, a decent chunk of that was spent on getting a legal opinion that doesn't match the legal opinion that this council has, and you're charging this council then for that opinion.
Yes, is the answer to that. Yes.
Thank you. And any other members on this item? No. Well, I think we kicked ties on that one pretty well. But no, thank you for coming. I think there's quite a bit of disagreement on the two sides on that one. But thank you for bringing that item to us. I think we'll take a 5-minute break now unless there's any. It's just as Mr. Sorry, yeah, Councillor Murphy.
I'd like to thank you, Steve, and it's nothing personal. This is purely finance of our dear constituents that I'm trying to keep in the coffers rather than it disappear down the road.
Okay, thank you. Yeah, so yeah, that item's concluded. We'll take a 5-minute break. So. Oh, yeah, of course. Yeah, we need a vote first. So yeah, the where are we up to? The page 4. Thank you.
Oh, we're about 95.
So the recommendations are that matters in the external auditor's report be considered, that the specific area around the borrowing for purchase of commercial assets be noticed and endorsed, including the rationale for the council taking an opposing view on this matter, noting this position will be reported to the council in the annual report, and the chair of the committee signs the letter of representation for each of the years being finalised. So can I get a show of hands for all those in favour? Yeah, that's 3 in favour. Those against? And any abstentions? That's 2 abstentions. Thank you, members. We'll take a 5-minute break now. Yeah. Thank you, everybody. Welcome back. So, agenda item 5 is the Capital and Investment Strategy Q2 report for 25-26. Tony,
Thank you, Chairman. So this report sets out the Q2 position in respect to the capital investment strategy. It covers the period 1st of April through to the 30th of September 2025. The strategy for 25-26 was agreed by Council as part of the budget setting report in February 2025. And essentially the strategy sets out a framework for officers to work within, and that work primarily deals with the management of the Council's debt position, and also the management of the Council's day-to-day cash flows. All of the activities covered in the period of this report were carried out within the requirements of that strategy, so we're not seeking any changes at this stage, and we don't expect to request any changes between now and the end of the financial year, so we're happy with the strategy as it sits. Just a couple of bits to bring to the committee's attention, mainly from enclosure 1, I think starts on page 15 of the agenda. In terms of the capital programme, we had actuals to date of 30.4 million against a budget of 35.7 million, which gives us a positive variance at that point of 5.3 million, mainly in respect of the HRA, and it's mainly due to timing issues. It's not uncommon for capital to be slightly skewed towards the end of the year, so we tend to find more spend in the second half of the year than we do in the first half. So we're not necessarily expecting that underspend to be in place at the end of the year. We think it will be closer to the budget position. But also on the budget generally, we have done some profiling of the budgets, and that's reflected in the report at the end of this period. The main difference in the original to working budget was the carry forwards from 24-25, and also the budget provision for the purchase of Southgate House following the Cabinet approval earlier in the year. In terms of debt itself, and there's a table on page 16 which shows that net debt had increased by 11.9 million over the 6-month period and had a closing position of 650.5 million. Gross debt at the end of the year was 673.5 million, which was a reduction of 17.1 million. Cash balances during the period fell from 52 million to 23 million. The table on page 16 shows how that debt has moved during that period, so it shows what the council's repaid and what the council's taken out in terms of new loans during that period. The capital financing requirement, which is in the table on page 17, which is essentially the council's underlying need to borrow, not the actual borrowing itself, but the need to borrow, is now forecast to be 14.3 million lower at the end of the year than we budgeted for, and that's mainly due to the fact that we disposed of the Solihull asset, and we've used that receipt to repay debt. So that's had an impact on the CFR at the end of the year. In terms of investments, surplus cash generated in the first half of the year, 0.6 million in interest income at an average rate of 4.93%. Rates have dropped off a bit since this report was written, so they're a chunk lower than that at the moment, so it probably won't see the same level of return in the second half of the year that we got in the first half. Enclosure 2 just provides similar information to what we've got in enclosure 1, but it's in a sort of dashboard form or a tablet, graphical form to make it easier to look at. And enclosure 3 just includes some performance indicators that we're required under the Prudential Code to publish with each of these reports. I don't think there was anything else I wanted to add, Chair, but happy to answer any questions.
thank you, Tony. Anybody want to get started? Yep, Councillor Headley.
Just for clarification, Chairman, the bullet point on the bottom of page 16 is probably down to my age, but can I have an explanation of what you're trying to tell us in that bullet point?
Absolutely. So this is when we deal with investments of the council's surplus cash. So this is treasury investments, so where we've got surplus cash and we just want to make some money on that. It's the order in which we consider the various elements of that investment. So we always look at the security of the sum that we're investing first. So that's the utmost consideration. So if we put £1 million out with a counterparty, we expect to get £1 million back. That's the idea. Liquidity is the second one, so we need cash that we can convert back or get back to the council when we need it quickly as well. So that's our second consideration. And only when those two are satisfied do we consider the actual return on that investment. So it's that order. It doesn't mean that we don't think about return, it's just the order in which we think about those things. So it's always security first, then the liquidity to get it back when we need it, and then yield as the final consideration.
Can you give us a couple of examples of what a counterparty is?
Yeah, so essentially it's any organisation that we are permitted to interact with under the strategy as it's written. And that's on both sides. It can be a counterparty that we borrow from or a counterparty that we invest with. And we've got certain criteria that we use. One of those is they've got to have a high credit rating. So we've got to have we set a minimum standard, but they've got to be there or above. There's a couple of examples. So we might invest in a money market fund, and they will always be AAA rated by all three agencies. And the reason we use money market funds is because those funds are held on call, so we can get them back on the same day if we need to. We might invest with another local authority, so there's quite a strong market of local to local investing and borrowing. So local authorities lend to each other and borrow from each other as well. And there's usually a bit of negotiation around the rates of those. So sometimes you can either borrow or invest at a reasonable rate. And if all else fails, we've got government departments, so we can invest money with the DMO, the Debt Management Office, which is a part of the Treasury, and they will always take cash from the council. The rates are not as high as we might get from other investments. And PWB, which is also part of Treasury, the Public Works Loan Board, again, we can always borrow money from them if we can't get money elsewhere and we need to borrow. So a lot of our long-term borrowing is through PWLB. A lot of our short-term generally comes from other local authorities.
That deals with the borrowing aspect, with the invest. So if you were to give another local council, tier 2 authority, the expectation is that you could get that back with interest? Okay.
Yes, absolutely. Yeah, the interest rates, whether you're borrowing or investing, because you can do both sides with local authorities, the interest rate is always agreed at the point that's taken out. So if we invest, it's always for a fixed term, for a fixed rate, and that generates the interest income. If we borrow, it's the same thing. Yeah.
Thank you. Councillor Murphy?
Yeah, I seem to remember, my memory's not as good as it used to be, but I'm pretty sure I remember that in one of these meetings just recently, we were repaid X amount by a couple of councils. So presumably we have lent money to other councils. Would that be a correct statement? So the bit that I don't get is on page 18, there's a list of councils that we're borrowing off of. They're all relatively short term. In fact, a couple of these would have finished by this. One of them says maturity date the 28th of 11th. So that one shouldn't be on there, I would have thought, but maybe I'm wrong. 17th, oh, then maybe 26th, yeah, sorry about that. I don't understand why we're lending councils some money and borrowing off other councils. It seems like giving one hand and taking out the other. Why don't we just keep our own money and let them keep their own money?
I think what this reflects is the management of cash flows, because what happens with the council's cash flows is that they tend to fluctuate quite a bit. You know, we don't have steady income that's always at the same level. So there are times when income. So it's probably easier to give you an example. You know, we collect business rates across the whole of the borough. Some of that money we're allowed to keep. Most of that money we either pay over to government or pay over to our preceptors, Essex County Council, Essex Fire and Police, etc. but there's always a timing difference between when we get that money in and when we have to pay it over. So as we collect that money, it will give us a short-term surplus that we then invest. And if there's a local authority out there looking for money, and they offer us a decent rate on that investment, then we will invest that with another local authority. At the same time, there might be occasions when we need to borrow money because our own resources have slipped below where we need them to be. And we look at it in a similar way. You know, if there's another local authority out there that's offering a reasonable rate for that short-term borrowing, then that's what we'll do. So there's always going to be occasions when we've got investments and borrowing with different local authorities, but that's just part of us managing our ongoing cash flows. What we're always doing in those instances is trying to seek the best deal possible that we can. You know, we don't play with the council's money. You know, we're not investing in money markets and, you know, funds and such like, but we still try and secure some value for the council in terms of the rates that we negotiate and you know, make sure that we get good return when we're investing and pay as little as we can when we're borrowing.
You made a statement there that we don't get money on a regular basis. I can't remember exactly how many households we've got in Basel now. 50,000, is it? Who pay the vast majority, I would have thought, pay their council tax every month, and I presume most businesses pay their business rates every month. So one would suspect that at the end of the month, on a regular basis, one gets, I know we don't get it all, we only get a percentage, but we do get a good income on a regular basis every month.
Yeah, sorry, I probably didn't phrase that particularly well. What I was trying to say was the income that we get and the amounts that we pay out fluctuate quite dramatically during the course of a month, and we're looking at this on a daily basis. So we make decisions about borrowing and investments daily. We don't look at it over a week or a month. We're doing this every day. So some days, yeah, you're absolutely right. We will get, you know, if there'd been a direct debit run or a backs run, there might be significant amounts going out or significant amounts coming in. There are other days where there's not quite so much activity, so the fluctuations wouldn't necessarily trigger us needing to invest or needing us to borrow. So there are days where those sort of things don't happen, but there are other days where it's more significant. But we're always looking at our cash position. So although we deal with it daily, we forecast for the year, and we're always looking ahead at what we need, you know, in the immediate future. So although we make decisions daily, we are looking ahead as well. But you're absolutely right. Yeah, there's considerable income that comes through the council's bank accounts.
Because when I said short term, I mean, on this report, and I'm not sure when it was done, but probably fairly recently, I mean, you've got some, you know, well, 28th, 11th, 25 here, and most of it will, in fact, every one of them's before the end of 26. That isn't short term, i.e. we're a bit short of money on the third week of the month, can we borrow some money for a couple of the weeks or a few days? These are borrowings that extend on average, one would have said, without adding it all up and dividing it, approximately 6 months, because there's some at the end of this year and some at the middle and the end of next year. In fact, most of them come out, yeah, some at the end of next year, so approximately 6 months. So that's money that we're borrowing, and it's quite significant there, 16, 21, 31, 41, 51, 63 million. If I can, if my eyes haven't deceived me.
Yeah.
That is what we're borrowing. How much how much have we lent, which is going to come to maturity, or do we know a figure of how much is going to come out to maturity that we've lent for the next 6 months, approximately? You know, I mean, have we got 63 million quid lent out, which is going to mature in the next average in the next year ish? I mean, can we balance that with what the money that we've got lent out?
So there's a couple of ways we're looking at it. I think the short answer is no, we don't have 63 million to hand that we can invest. I think the figure that we had at the end of the period, I lost the table in my papers, but I think it was 29 million we had at the end of the 6-month period. So that's the amount of money that we had available to the council that at that point in time was invested. I think it's a really difficult thing to explain in a short time in this sort of environment, but what we're trying to manage is those fluctuations in cash flow. And with our short-term loans, what's happening is all the time we've got loans coming up that need to be repaid, and we will make a decision based on whether or not the council's got sufficient resources, cash resources available to us, as to whether we need to then go out and borrow again against that repayment, or to make that repayment, or whether we have got enough resources not to do that immediately. So we would only take out loans when we absolutely need to. One of the reasons why we've seen the reduction in the cash that the council's held is that when I came in earlier in this year, I think we were holding on to too much cash. We didn't need to. We managed this on a daily basis. We didn't need to hold as much cash as we did, and there is a cost to holding cash because the amount of money we earn from investments is always lower than we pay in interest. So we always need to manage that position and make sure that we're maximising for the financial good of the council. So what we've done is made a conscious effort to reduce the amount of money that we are holding, and what that has meant is that those cash resources that we've been able to use instead of borrowing in the short term, but it is only a short term benefit at some point, we will need to convert that into borrowing at some point in time. But it's just managing those cash flows. That's essentially what we're doing all the time.
That wasn't quite the question. The question was that we had £65 million borrowed from other councils. Do we know how much we have got at the moment, which we have lent to other councils? Have we got the same sort of money lent to them, or have we got any money lent to them?
So out of that 29 million, there would be a certain amount. I haven't got the figure to hand, but out of that 29, most of that will be with other local authorities. There might be a chunk that would be, say, with the Debt Management Office. So it would depend on where the rates were best at the time and whether anyone was looking for money. But the position's never going to be equitable. You know, there's always going to be points in time where you've got, particularly with your short-term position, you've got more borrowing than investments. There might be another time where, you know, your borrowing comes right down and you've got more investments than borrowing. But generally, because of the way that we operate, we tend to have more borrowing than investments at any given time. It's just the way that we operate.
Thank you, Councillor Murphy. Any other members got questions on this item? Well, I'll just on bottom of page 15. I think we touched on it just then, but where it says as of 30th September 2025, external investments stood at 23 million, 29 million lower than start of the year. I mean, what are the reasons for that being significantly lower?
Essentially, we just... Apologies. Sorry. Essentially, we just took a conscious decision not to hold as much cash. Like I say, the issue with having investments, if having those investments means that you've had to go out and borrow, that's costing the council money because the interest on borrowing is always higher than the interest we receive on investments. And it's really about how confident we are in the data that we've got. So what we don't want to do is to hold cash unnecessarily, but we need to make sure that we have enough cash as liabilities become due. So we need to make payments, we need to pay creditors, and we need to pay for the people that provide services to the council. So it's about managing that sort of day-to-day position, which is why the liquidity side of the investments that we were talking about earlier is quite important, so we can get money back when we need to. But it's just really a conscious decision to reduce those cash balances so that we didn't need to borrow quite so much.
Yeah, thank you. Any other member? Yeah, Councillor Murphy.
Just out of purely amount of interest, if we needed, I don't know, £3 million tomorrow, how easy and quick is it to borrow off, we'll say, other council, well, yeah, off other councils?
That really depends on what's going on the day. What we tend to find is the local to local market, there generally is cash available, and we work with a number of brokers that help us with arranging deals between us and other local authorities when we need to do them. The question isn't really could we get the cash. We could definitely get the cash tomorrow if we needed it. The question is how much would we pay for it? And that's the bit that we try and manage on behalf of the council. So what we would not want to do is to be in a position where we had to go out to the market tomorrow. We'd be looking a day a week, a month ahead, and trying to organise something in advance so that we had the 3 million coming in at a rate we were happy with. If we couldn't do that, it's about making sure that we've got money. So we might have 3 million in a money market fund that we could call back, or in a call account that we could call back. So it's about making sure that we've got that money available in the best form possible. So part of that might be we would look at whether there's a short-term loan that we could take at a reasonable rate. If that money wasn't available, we might look at calling back one of our investments and using that instead. But either way, we'd be looking for value, and we try not to do things on the day. Although we've got to actually do the transaction on the day, we try and get it arranged in advance so that we can build in that value that we need to.
Councillor Headley.
Two small points. If you had to call back quickly, unexpectedly, would there be a penalty charge on that?
No, with cash that we have on call, so that'll be anything that we've got in a call account or anything with a money market fund, that's permitted under that. I mean, there's usually a penalty in terms of the interest that we earn on those investments, and that's always the sort of trade-off with security, liquidity and yield. Those three things is there's always a trade-off between the three. So, you know, the higher the security, the lower the yield, the higher the liquidity, the lower the yield, etc. So there's always a bit of a trade-off. But if we've got money that's on call, which we always have a certain amount on call, we can bring it back the same day without penalty.
And just again for clarity, I think during your comments you mentioned the acquisition of Southgate House, was it? How was that financed?
That was financed from borrowing.
Do we know how much?
How much borrowing we did? I'm not sure if that's commercially sensitive. I mean, I'm happy to come back to you after the committee, but yeah, I'm not sure if that's in the public domain, so yeah.
Okay, thank you. Any other comments or questions on this one? No? Well, thank you very much, Tony. That item was for noting, so thank you. And on to item number, when I get there, item number 6, which is Annual Governance Statement, Action Plan and Assurance Update, and that is Sarah.
Thank you, Chair. So this is our normal report to the committee. The main purpose is to give you the outcome of the Q2 assurance process surrounding the effectiveness and compliance with our council's arrangements, and also gives you an update in respect of the council's annual governance statement action plan. So each quarter the council reconsiders the effectiveness of its governance arrangements based on risk, which in turn helps us to provide the evidence base for the production of the annual governance statement. It's important that we keep you up to date of any issues that may arise during the financial year. So in enclosure number 1, that gives you progress made against the annual governance statement actions as at the end of Q2. In regards to our assurance process for Q2, there were 2 main categories of risk that were highlighted. So the first one was regarding non-compliance with key management activities. So the Chief Executive introduced the year of compliance and assigned specific compliance areas to each of the assistant directors. Progress against some of these governance areas has been limited, and we continue to encounter some challenges that hinder the effectiveness of the oversight and control mechanisms. So the report provides members with details of each of those concerns. The second area relates to service effectiveness.
So services have raised concerns regarding rising workload demands, and we've also identified a need to strengthen contract management and procurement oversight. So I'm happy to take any questions.
Thank you, Sarah. Any members got a question? Yep, you want to...
Thank you, Chair. Yeah, thanks, Sarah. I guess it's a bit of a common theme. I think when you were with Mike in October and then the same in June, it's kind of don't seem to be making a lot of progress. It's not a question. It's just an observation and a comment. That this is just a reoccurring. I think I said last time I sensed Mike's frustration, and it's probably. I'm guessing it's something similar now. So again, it's out there really just to kind of, I guess, for discussion. And you know, at what point does it get closed down, or what's the end result? Just gonna dates seem to get pushed back and pushed back.
Yeah, thanks. Sarah, do you want to come back on that?
Yeah, so we obviously, yes, it is a concern, and it has been going on for a little while now. I raised it at CLT last week, I think it was, and since then the Chief Executive has actually issued an email that's gone out to CLT today to try and address some of the concerns that we're raising, explaining that our governance arrangements are non-negotiable. They have to be done. And we've clearly set out what the expectations are for the end of this quarter. So when I bring the report to you next time in February, hopefully we'll be able to report a slightly better position than where we are at the moment.
Thank you. Councillor Headley?
Yeah, I think the whole section on non-compliance and the key management activities, all of those highlighted bullet points are a real concern. There seems to be compliance issues. You're describing them as persistent. Training remains low. You know, in the government. I mean, there is a real concern. Is there a timeline for putting that right? I mean, I'm assuming if you're doing a RAG report, these would all be red indicators. So, can you give us some assurance that they will all be addressed and completed by Wednesday week?
No, maybe not by Wednesday week, but obviously we are trying to highlight it. We're trying to, and I think Tina can back me up on this, but I think people are trying to raise that, you know, there's a lot of priorities, there's a lot of things that are being pushed through, and sometimes these things just get pushed back. Doesn't mean it's right, but you know, I think the intention of officers is they're trying to do the best job they can, but there are limitations to, with all the priorities that are coming through, where some of this work gets picked up. So, you know, I can only say to you, when I come back to you in February, obviously it's not improved, then we can ask the question again, but hopefully we'll be getting the updates that we need.
Just as a supplementary, I think, if I can get this thing to work, service effectiveness and 2, you're highlighting the issues with the complexity of emerging priorities present a significant concern. The pressures on the organisation. Earlier, Councillor Murphy brought up with the external auditor, did they have enough staff trying to complete their audits? Are you confident that you have staff with sufficient knowledge and training and expertise to address the problems you have? Is there a staff shortage, or in certain areas where we need to recruit staff with specialist knowledge?
I don't know if you want to take this. I'm not of a high enough level to be able to answer that. I'm not party to the conversations that go on at CLT, so Tina might be able to expand on that.
So I think the whole compliance issue has been raised up the agenda and now gets a monthly discussion at corporate leadership team. So we are trying to bring this all of the time and trying to get some traction. I mean, there's a couple of things in here about the service effectiveness. It mentions contract management. Well, this week we've started to roll out some training that procurement colleagues are doing to officers across the organisation to start to build that confidence in dealing with some of those. So it's a number of things. It's that monitoring, trying to raise the agenda, but also we're always conscious of resources. I think we'd all like to have lots more staff to do the things we do.
Thank you. Councillor Myers.
Thank you, and thank you for Tina for that answer, because nearly what I was going to be coming on to, because obviously with CLT team and obviously with the Chief Executive, we brought in this year of compliance, and obviously from the last meeting, that obviously not the October one but the one before, where this was highlighted, and how important it was that the governance and the audit of the council and its work and its service effectiveness, and how training's been going forward is manifestly important to make sure that mistakes don't happen, and we've got a very clear audit trail of how services are responding to inquiries, and also about good governance arrangements and reporting risks as and when they find them. But it does seem a bit concerning that since then, obviously a low take up on training. Since you now said that some things are going to be coming forwards in terms of training, well, procurement, for example. But in this report, there are particular issues. Councillor Headley's mentioned a few. Persistent issues, compliance issues around performance management, training taking place and not being trained. Compliance with mandatory training remains low from health and safety, for example. We've had issues, obviously, with around sort of data protection, having to protect people's data and who the controllers are, etc. Now that's becoming more and more vital in the world of cyberspace and using AI and everything else. And obviously, you need to be aware of that as a council and how going forward. So there is quite a bit of negativity in this report that I think needs to be, we need as a group here, the Audit Risk Committee, to basically say, and the independent member here said, the reports we get back are basically saying the same thing each time, and it's when do we get to the point where we can sit here and say, yes, okay, there are still issues, but we can see a real forward momentum in getting this, if it's going to come from the top of the CLT, a year of compliance, then surely we need to start seeing improvements way before, because the year ends, end of March. So we're now in December. You've basically got just over a quarter for that municipal year for us to start seeing results, I think.
I've just had a couple of points to that. So I think you particularly picked out the health and safety training, about that mandatory training being low. So one of the things we talked about the last compliance meeting of corporate leadership team was that we're going to have a health and safety audits to see where every area is at with its training, and they're starting in January. So there's a number of things in train to try and address some of these things. And I think there was another point about, I think you mentioned information governance. So the policy's recently been refreshed and promoted, and also there's now information governance meetings that happen on a regular basis where the information asset owners are present, and there's a whole load of work we're trying to do that. Whether they were there before, I don't know, but there feels like there's some traction in that area as well.
Okay, Councillor Myers, you put it? Yep, Councillor Murphy.
Yeah, what I'm going to say is more an observation rather than a question, but I think we should sort of congratulate ourselves and congratulate officers and the people there, because they are producing charts that show they're not doing well. They're not trying to hide it, they're not trying to push it under the table. It's out there for us to look at and everybody to look at, and obviously it's the information we've got tonight, they're doing something about it. This is good. This is, what we need. We don't want to put our dirty washing in the cabinet and forget about it. We want it on show so we can deal with it. And I actually congratulate the people and the officers for basically being honest. I'm sure in a lot of councils there's a lot of people who are not being quite so honest, and they're tapping themselves on the back, and we could have been in our cars on our way home by now, but because we've had to discuss it a little bit anyway. Try and get on top of it, but well done. for keeping it in the council's eye rather than trying to hide it.
Yeah, absolutely. Thanks for that, Councillor Murphy. Any other comments on this item? No. Well, this item was for noting, so thank you everybody. And on to agenda item number 7, which is corporate risk management updates, including the work of the Audit and Risk Committee working group, quarter 1 and 2, which is Sarah.
Okay, thank you. So this report then gives you an overview of our risk management arrangements and activities during quarter 1 and quarter 2. The first enclosure provides you with all of the significant risks which are above our agreed risk appetites. So they've all been reviewed by the corporate leadership team, and at this time there are no risks that require escalation to the committee. The corporate risks then, so we currently have 19 corporate risks on our risk register, included in enclosure number 2. We've also recently added a new corporate risk relating to the service disruption and reputational damage during the housing repairs transition. So that's a new risk that you'll receive regular reports on. The risks that are reported as red at the moment relate to project management, organisational transformation and pace of change, failure to manage the reputation of the council and the borough, cyber security and devolution, local government reorganisation. There's also a number of corporate risks that are rated as amber, and these were included within the governance report, and there will have been an annual governance statement action that's linked to those. In regards to the working group, so far we've had 2 working groups, and we've got a following meeting in January 2026. So I'm happy to take any questions.
Thank you, Sarah. Any members wish to speak on this one? Yeah, Councillor Myers.
Yeah, just to say, you know, it's all here in front of us. We can call it and to have a closer look at bits and bobs as we're going ahead. Some of them are new, so we'll wait to see some reports in the future, and hopefully we can add some insight into those going forwards.
Yeah, absolutely. I agree with that. Any other members on this one? No? Well, thank you very much, Sarah, for that one. That item was for noting. And the final item for this evening, agenda item 8, which is the work programme 2025-26. Any members have any comments on the work programme? Councillor Myers?
Yeah, just to add. Just to add into the working groups going forwards, because obviously there's been a large acquisition of the Westgate and proposed works that have been going on, especially with some planning being done for the houses, hotel, and of course the rest of the sites for a potential arena. So it'd be interesting to see the risk governance and financials of that as and when reports come up going forwards as well. Thank you.
Yeah, absolutely. That's also something that I think we can discuss in the working group as well as it goes. Any other comments or questions? No. Well, that was for noting as well. So thank you very much for everybody for coming. Have a safe journey home.